Okay, so good evening everyone. Trust we all are doing good. Now, welcome to the first video on how do I trade. I believe this is one question that everybody has been asking on the group. How do I approach price action and how do I go about my price prediction? And how do I go about my price projections? So here you go. So let me break down a few things before I begin this video. Now, the thing is, I don't have a special way of trading. I'll be sincere to you. I don't have a special way of trading. I just trade what I know or what I've learned. So the big question is, what do I trade, or what do I know that I trade, or what do I trade that I've learned? I trade three major type of trading style. That is Falcon trading style, transparent FX trading style, and Astro FX trading style. Now, this first video will be on Falcon trading style, and as everybody knows generally, if you are trading Falcon, it's all about long-term proposition of price, where price might be heading to next. But the problem with Falcon is they don't really consider much confluence. But in this video, on my own trading style based on Falcon, I put together, or I've considered, many confluences to take a trade. Before I take a trade, I don't just determine on patterns alone. I apply the things I know, which are support and resistance, supply and demand, anything I believe, divergences that would actually give me a heads up or an edge when I want to look for a trade. So let's dive right into it. Now, I know most of you might have learned a trading style, a trading method, and you want to totally ignore it. Do not be stupid. Don't ever ignore anything you've learned because of you've learned something new. I made that mistake and I wouldn't want you to be making such mistakes again, like making the same mistakes I've made. It would be very, very, very bad if you make the same mistakes I've made. So um please and please and please and please don't ignore everything you've learned because of I'm teaching my trading approach. Rather, find a way to combine them to work together. And this is just the first video on my trading approach, like the first video on me, my trading approach, which is just based on Falcon alone. So let's dive right into the chart. Now, I'll be dealing with just one chart. I will ignore this second chart totally. So I'll be dealing with one chart. Let me just delete all of this and let's make this big. Then take out the indicators, because on Falcon they don't use indicators, just mainly price. Or most of my trading approach or style, they don't use indicators, it's just mainly price. So let me explain a few things before I get down to how Falcon is. Now, Falcon is based on long-term price projection. Long-term price projection, that means they want to know where price is heading to long term. That's what they are more concerned about, so that they can know where and how to scaling, or what trading opportunities they should be looking for. Now, what is Falcon mainly based off? Falcon is mainly based off the following things, which is patterns, structure, market phases, and what else? There should be something else. Yes, it's still based on that structure actually, which is impulse and correction, but let me just state it here. Now, this is what Falcon is majorly based off, so it is nothing big at all. I'll be breaking them down one by one. Now, patterns in the financial market are just normal chart patterns, like they are just the normal chart patterns. There's nothing interesting or difficult about them. So what Falcon majorly bases off when it comes to patterns is just the normal patterns that we know: head and shoulder, head and shoulder, double, tops and bottoms, wedges, that's the rising and falling wedge, the triangles, sorry, triangles dependent. Yes, these are the chart patterns that they are majorly based on. This is what like this is what they use as confluence for them. Yes, this is what they use as confluence whenever they look at price on the chart. Like they want to see these things before they will buy or sell. But there is more to this. There is more to this which I'll be explaining. Now, when it comes to structure, I've explained market structure over and over and over and over again on the group, and almost every time I lay emphasis on market structure. So yeah, I'll be talking about it again. So market structure is just the structure of price on a chart. Now, market structure, series of higher highs and higher low, series of lower highs and lower low. Where direction is heading to? Like, are we in an uptrend? Are we in a downtrend? If we're in an uptrend, we are looking for buying opportunities. If we're in a downtrend, we are looking for selling opportunities. Simple as ABC. So we have uptrend, which in one bracket we write HH and HL. That's higher highs and higher low. While downtrend, comma, downtrend, we'll have lower low and lower high. So it's quite simple. It's very very simple. That's just like the key advantage in this when it comes to structure. Now, market faces is more of this. Yes, is more of impulse and correction. Now, when it now comes to impulse and correction, we will now come down to what phase is the market in. Are we in an impulsive phase? Are we in an aggressive phase? Now, are we in an impulsive phase or are we in a corrective phase? Now, in an impulsive phase, let me let you know something. Price will move in alignment to the trend. So let me just write that out. Impulsive phase. Price will move with the trend. While in a corrective phase, price will move against the trend. Now there's more to this. Like there's more to this when price will move in alignment to the trend or price will move against the trend. Now also when it comes to an impulsive phase or corrective phase, it's just like, remember we said in an uptrend we have higher high, higher low, higher high, higher low, higher high, higher low. This impulse is called an impulsive phase. This move is called an impulsive phase, while this move to the downside is called a corrective phase. Impulsive phase, corrective phase, impulsive phase, corrective phase. Simple as ABC. While in a downtrend, okay, let me delete that. I thought I could turn it upside down actually, but I couldn't. While in a downtrend, lower low, lower high, lower low, lower high, lower low, lower high. Okay, a minute. So in a downtrend, I said we have a lower low, lower high, lower low, lower high, lower low, lower high. Now this is the impulsive phase, this is the corrective phase. This is the impulsive phase, this is corrective phase, impulsive phase, corrective phase. Now there is another thing about Falcon that I need you to know, which is nature. Yes, nature. They call it nature. Now it's fully called nature of price, like nature of price. Now this nature of price, very important, you know it all. Very important. Nature of price. Now this nature of price still talks about impulse and correction. Like there is something very interesting about impulse and correction that most people in the financial market will never figure out unless they spend very much time in the financial market. Thank God we could figure that out quite well and easy. Now when we say nature of price, you have to know how price is moving. It's not just to know that price is in an impulsive phase or in a corrective phase. You must know that movement. What nature that movement is. Is this movement a very impulsive nature, or is this movement a corrective nature. Now I will still explain with the concept of that uptrend. Let's take this as an example. This is a higher time frame. That means I'm talking about the weekly, daily, the weekly and daily in this instance. So we have an uptrend on the weekly or daily time frame, any time frame you feel like choosing. Now let's come and talk about phase. This is an impulsive phase. Remember, this is an impulsive phase. Now in this impulsive phase, you have to understand the nature of price. You have to understand the movement of price here. You will now drop down to a lower time frame. Is it an impulsive nature or is it a corrective nature? Now when you understand that, okay, price on the lower time frame is still showing impulsive nature, when price gets here now, the way I want to explain is this point. Let's say price is now approaching this level. When price approaches this level, you must start noticing the way price will approach this level from this point here. This point I'm writing something on here. You must start understanding how price is approaching this point. Now remember, price was moving with full force here. You see some sort of slowing down at this point. Then when the sort of slowing down shows, you understand that, okay, this is about to enter into a corrective nature because of the way price will be approaching that zone. Share you grab. Now let me explain something real quick again about impulsive nature. When price is moving in an impulsive nature, zones will be broken. Let's say this is a zone right here, this is a zone right here, and this is a zone right here. If price is moving with an impulsive nature to the downside, it will break all this thing. Well, if this is a zone here, another scenario now, and price is moving with the corrective nature towards this place, there is a huge tendency that price will reverse and move the other way around. So I hope that is understood to the core. And when we get on the chart, we'll actually talk about it. So we have nature of price, the impulsive nature and the corrective nature. Now let's get right into it, how to analyze using Falcon. Now how do you analyze using Falcon? It is from the monthly time frame. Now I've not checked this chart before using Falcon at all. I have not. I'm just going to check it right now. Now what do Falcon major on? Falcon majors on long-term directional bias. They want to know where price is heading to long term. So how do they analyze? Now the first thing is they start from the monthly time frame. Some uses the weekly time frame, some uses the monthly time frame. I don't give a fuck which one works for you. Just use it. Now on the monthly time frame, what they want to do is they want to know direction. They want to know direction. So what will they do? They will throw a channel on this chart. So they start from last swing to this. Now looking at this, what do you observe? You can see that this was a bearish channel, but what happened? It is no longer what? Bearish. That's the first thing to note. Then after that, you can now make all your readjustments and all. Then after that, once you know that this thing is no longer bearish again, it has started showing signs of moving bullish. Why? It broke previous structure right here. Now you want to pick up, you want to reduce your chart a little bit, then you want to still pick up another channel from here. Now you want to try as much as possible to touch different points in price. Then you push this a little bit up right here. Now you see everything is set and ready. You can actually see that, okay, this was in a bearish channel before, but now currently it's in an upward channel. That means you're expecting price to actually push to the upside. Now with this known, what do you want to see again? You want to see other things. Now I'll be talking about just Falcon purely before I now start talking about adding confluences that Falcon doesn't add. Now if this were to be a Falcon price projection, they will just do arrow like this. They just point the arrow to the upside. Yes, they are correct. They are correct. Price will go to the upside, but price won't just go to the upside. Now they will go to the weekly time frame. They need patterns. They need patterns. They need patterns. Now on the weekly time frame, what can they see? They can see a double bottom, a major double bottom. They will just pick up any two and do this one here then 1 year. Okay, that's a double bottom. Now they've gotten a very good pattern that will give them a heads up. So they just pick these two right here, horizontally, and place it here. They know that that's the bottom. And now another thing about Falcon is they deal with weeks is what they deal with. Then they will now pick up this horizontal ray too and place it right at this high right here. Now this is their target. They don't want to ride price to the upside, they just want to ride it back to structure. So if price should actually move to this extent, they will now write something called 90% rule. Now what is the 90% rule? 90% rule is a scenario or action of price whereby price will go back to where it is coming from. So this is where price was coming from previously, so they believe price is going to go back to where it is coming from. Now to the daily time frame, now what will they look for? They are still looking for patterns. Now what they will do is just they will pick up a trend line. Remember I said they deal with relevance in price, so they just pick up a trend line from this point and also they back it up, or they just use a channel to be precise, but I already used the trend line, so it's not bad. They can now back this up with a channel also, like to show that okay, this was bearish as at this moment and it came down, so we are looking to go bullish. What would they look for again? They will look for patterns in price. Like I said, patterns in price. Now the pattern that they will be looking for on this chart is a general pattern. I don't give a fuck what type of pattern is it actually. They will look for a general pattern, actually a general pattern, to actually give them a heads up, like okay, this is what price will be doing. So if they look at this chart, the general pattern that they will see there is a range of price. Yeah, price was in a range right here. So now they will, once they highlight this range, that this is a range, and they see it has broken out and retested, they actually have this idea that okay, price is going to move to the upside, so they will be looking for buying positions right from the daily time frame. Now on the 4 hour time frame, that is what they will go on to next. What would they look for on the 4 hour time frame? Very simple, chart pattern. Now on the 4 hour time frame, they would have seen the chart pattern as the up on it. What chart pattern is that? The head and shoulder pattern. Now they just pick up the head and shoulder too and just do this. Start with the left shoulder, the right shoulder, the head, then the right shoulder, and boom, they have their head and shoulder pattern. Now the thing is, once we understand the concept that chart patterns will never be picture perfect, we are good to go. So here we have this inverted head and shoulder. They will be looking for buying opportunities. They don't use Fibonacci, they don't use anything, they just deal with current, to just do with price itself. Now the time frame they use mostly is the 1 hour time frame for entry. So whatever they are looking for on the 1 hour time frame is just what? Structure. They know this is a low, this is a lower high. Sorry, they know this is a low, this is a high, and this is a what? A higher low, and this is a higher high. So what they'll be looking for is a what? A higher low right here. Now when they get this, there's this thing when you're on the chart, always you would know when price want to react. Now looking at this area right here, weeks everywhere, this is actually a trigger, like price is about to move to the upside, so they will be getting ready to take their entry right here, like a trade entry right here. So they can now drop down to the 15 minutes time frame and look for sentiments that will actually align with their buy setup, then they actually take the trade for a buy. So I hope this way I have simplified the way Falcon trades for you guys. So let's do one more example, then we'll call this video off, as I'm done with whatever Falcon does. If you need Falcon course, come to my inbox, I would give it to you. It's about 100 gigabytes of educational content. There are PDFs, there are videos, there are webinars, everything you need. I have it when it comes down to Falcon, and it thanks to BJ. BJ was the one that actually gave us the course. He added it to our collection. Thank you very much, bro. I know you'd watch this video, so thank you very much for giving us the course. Very grateful for that. So now I'm done with the GBP chart, and you can see how easy it is, the breakdown price action. Now we can go to another chart, which is possibly NZD USD or NZD GPY or NZD whatever. So let's just check NZD. Let's try NZD USD. Yes, let's try USD pair. So I'll just reset my chart and go down to the monthly time frame. So they always start from either the monthly time frame or the weekly time frame. Now, sorry. Now, if a Falcon trader looks at this chart, what will they see? Now, ignore the head and shoulders. Yes, I know you saw the head and shoulder, but ignore that first. You want to think like a Falcon trader, not just somebody that hops on the chart and sees whatever is there. Now, what a Falcon trader will see is a channel. They'll reduce this a little bit and they will see a channel right here, from here to this point right here. So let's mark out that channel. Remember I said they deal with weeks, so it must be about weeks right here. Wow, I have to drag this back into price and boom, we are good to go. Okay, so seeing that we've marked out a channel on this, now what a Falcon trader will see is that this is a fake out in price. So they will not be looking for selling position, they will still be looking for buy. Why? There is something they call three touch confirmation pattern. What is three touch confirmation pattern? Very, 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 very simple. Let me hide everything on this chart. Now the three touch confirmation pattern, from the name itself, three touch, it must touch somewhere three times and it will act as a confirmation. Now a three touch confirmation pattern is very, very easy. Let's say this is a channel. Okay, let me clear that out. Now let me say this is a channel. 1, 2, 3. So price has touched this channel 3 times. Now look at it. The first time it reacted. What do you believe it will do the third time? It will react. So that is what a three touch confirmation pattern is. Now it has touched it the first time, second time, third time. What do you believe it will do? It will react till imbalance is found in the market, whereby buyers and sellers do not agree anymore. That's when you find a breakout occurring. So that is it, simple as ABC. That's what a three touch confirmation pattern is. Now I can unhide this chart, and yes, so we already have a three touch confirmation pattern on this channel. And also what they would see is that price is on a corrective phase. Remember, this is going to the upside, so any move to the downside is on a corrective phase. So now, them knowing that price is on a corrective phase, they will just pick up a trend line right from this point and drag it deep into price right here. And what do they have? They can see a break and a retest. Now let me tell you something real quick. You have to stick to a trading style, a trading pattern. If you analyze this chart using Falcon, you will see a buy. If you analyze this chart using possibly AstroFX trading style or transparent FX trading style, you might see something else, and it would actually ruin your bias on a currency pair. So ignoring what I said but putting it into deep, like crazy shit confirmation, knowing that we have a counter trend. Yes, this is against the trend, so it's called a counter trend. They will actually be looking for buying opportunities to the upside. Now what they use the monthly and the weekly time frame for is just to note directional bias. Like they know where price is heading to now, they can now measure into it. They will now go to the weekly time frame. They'll go to the weekly time frame now. Now the weekly time frame, they want to see this counter trend correctly. They want to see it better on the weekly time frame. Now on the weekly time frame, see, they've seen that okay, this counter trend is true, it has broken, it has retested, and there's a huge tendency to go to the upside. And also, what do they have? They have an inverted head and shoulder. Yes, I know you might think I'm lying, but there's an inverted head and shoulder, left shoulder, head, and minor shoulder right here, minor shoulder right there. But even if price will still drop down, then we expect a major shoulder. Now with that known, they would actually be looking for buying opportunities. Now they reset this chart and they can see price a little bit better or better. Then to the daily chart is what they will go to. Now on the daily chart, they are just looking for counter trends against that buy trend. Now they know that this is a counter trend. What they will do is just they'll be looking for reaction of price at the previous area of structure. That means they're looking for buying opportunities. This is a counter trend. They would not trade it, rather they'll be looking for buying opportunities. So they go to the 4-hour time frame. They look for chart pattern, chart pattern, chart pattern. Now they have a double bottom right here. So they will just wait for price to close above the net line of the double bottom, which is here. This is the double bottom. Now they will just wait for price to close above the net line of the double bottom. Yeah. So once price closes above this area, they will look for buying opportunities on the 1-hour time frame. On the 1-hour time frame, they'll be looking for buying opportunities. And also, what they can do on this 1-hour time frame is to put a trend line on this 1-hour time frame. And just with possibly they'll be waiting for a retest here, and they will take an entry right here. If they take an entry right here, they call it risk entry. If they should take an entry above the net line, they call it reduced risk entry. Why? The reason they call this a risk entry is because of price is still to the downside, so they are taking a huge risk buying from that level. Well, if price is above this area, they call it reduced risk because of price is already moving to the upside. So the risk that the trade will fail is very, 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 very small. So that is just the whole thing about Falcon trading style. Now, Falcon trading style, you see, is very, very simple, yes, and all. But let me tell you the truth. You can't just trade. I'll tell you the pro and con of trading Falcon. The pro of trading Falcon is it will make you look like a pro. Very stupid, right? It will make you look like a professional. Your chart is clean and all. But I said something previously. No be say make your chart clean, make it fine. It's about if your TP, you're smashing TPs back to back. Okay? So the best advisable thing when you are trading Falcon is to include other factors of what? Confluences. Now, include other factors of confluences out. Let's go back to the monthly time frame. This is a previous area of structure. You would have marked this area of structure out. Now, this is how I trade Falcon. I don't just trade it because of it's just normal price action. This is a previous area of structure. Now, price is above it. I know that there's a huge tendency of buying. So this is a confluence within a confluence. On the weekly time frame, what do I want to see? I want to see price react. I will know that this is a previous area of structure, a support. I will just pick my trend line to and place it there. I mean my horizontal rate to and place it there. I'll go to the daily time frame also. I'm expecting price to come back to this level that I marked out on the weekly time frame. So it is at that level I'll be looking for a buy. I will not be looking for a buy opportunity above the net line or anything. I hope you grab. So it's not about just trading Falcon as you. It's about looking for confluences. Add things to your chart. You can trade Falcon straight up, but add things. Don't be somebody that because of they tell you A is A, you won't find out why A is A. So I hope you understand that concept or the thing I said, and I hope you are cool with it. So you don't just trade Falcon because of Falcon is clean. It's not. It's something. It will. You see, you lose trades. Like you lose trades. I'm being sincere to you. You lose trades. You lose money before you actually sit back and realize you shouldn't have done it like that. There were other ways you could have done it, which are that's what I just told you. Look for confluences. Look for confluences. Confluences is big. Looking for confluences is big when you are on a trade. Don't just say it will buy. Look for more reasons why it will buy. So that's just it. And I hope this video has actually opened your mind or eyes to the way I trade Falcon, to the way Falcon is, even if the course is too mad and all, even if it's very, very simplified, and there are sometimes it will be very, very crazy. You won't even know what to do on the chart. So I hope this has simplified it, and if you've got any questions, please ask me. I'll be glad to give you a response, a reply. Thank you very much.